Greetings, beloveds. Eric Mother.com with the weekend market analysis for March 11th and 12th, 2023. All right, let's take a look at markets here with about an hour and a half to go before the close of the week and the session. And we can see here that the market is coming off the lows right now, down for the week, off the lows for the day, but still down about, let's call it 1% down on the major averages. And as far as the cryptos are concerned, we can see Ethereum here down about 1.4. Bitcoin is down about 2%. For the week, US markets are down 4%, a big down week, and cryptos are down, let's call it about 10 to 11%, another big down week for the cryptos there. Let's take a look at the Dow weekly now. Remember, we had a nice close last week, and this is because we moved the RSI 50. We moved the RSI back above 50 last week, and this week we are seeing the exact opposite, big down candle as we slash and move below RSI 50. So generally when you do that, you tend to close towards session lows, and I believe that's going to be the case even for this week. Now, having said all that, we can see where we get this resistance. Number one, there's an obvious line of resistance that had developed over a period of many weeks, and we can see that this area here became rejection over a period of about, let's call it about a month. And now we see the end result of that is this pullback here. So, okay, we got the pullback. Question is, what next? Couple things to consider here, and probably the S&P 500 is going to show it more clearly. There is a line that I'm sure many people are watching. If you take the weekly closing high right here, and this weekly closing high, and then this weekly closing high right there, or weekly closes, let me say, and draw a line, you come to this line here. So there is a theory, a thesis, possibility that this could be where we test, maybe even slash below it and eventually recover. So that's possibility. And in fact, let me show you the S&P 500 briefly here, because it shows that we're already testing that line. So S&P 500 on the weekly, connecting the weekly closes, something like that. And again, the close here, the weekly close on this week here, and this one here. So you can see we broke out above this declining line. We've come all the way back. You can see as of Friday, we went below it, dipped below it, and that's where the institutions, the manipulators, and the people who know that sometimes opportunities are presented in odd times, and if you took a position, those who are taking a position that this could be where we find support could actually end up seeing a good return. We shall see. But it's an area of consideration. Now, back to the Dow weekly chart. What I was saying here is, yes, we are down for the week. But remember, we are not at the lows, even though you'd think with the sentiment in the market that we were trading somewhere around here. We were trading well below where we are trading. The lows on the Dow are still intact. All right, couple things to consider also, and why personally I can see a couple things, in fact, let me say a lot of things that are developing that could end up being destructive for the market. But at the same time, I also see a lot of things that one can lean on if you're bullish, if you have bullish positions, or if you want the market to recover. And here I'm showing you two lines. So the black line is where we break out here, which is, I believe, this movement here. We test it, a little bit of a test there, we recover. We come close here, and here we are moving again. And we came close last week here, we held. And so the same line here, in my opinion, if the market bounces above the black line and the green line here, week to week, actually what you see next then is that the market is going to recover. Now, it becomes a market that is definitely poised for lower prices if we sustain levels below these two lines on the Dow weekly. Back to that S&P 500. And just want to show you, if you haven't been following along, we had come back to this level here, and it's a level I had been highlighting for a while. The fact that we broke down here in early 2022 was going to make this an interesting level. We stalled in August of 2022 last year, and here we tagged it a couple times actually, and this led to this pullback zone. That's the S&P 500. Now, S&P 500, just like the Dow, we have a similar possibility of now this RSI lows line becoming support. Until we break this lows line on the weekly, this market is fine. Remember, irrespective of whether you are bullish or bearish, markets never go up in a straight line, and they never go down in a straight line. So, in my opinion, until we break this RSI lows line, this market is pulling back after making major lows right here. And a pullback is not the worst thing in the world, because it resets for the next leg. NASDAQ daily, I'll draw a couple lines. There's the RSI lows line that we would need to break before we really see another leg down. or a serious leg down. And then there's also the need to consider where we come off recent lows, which is this RSI movement here. And we move here, and in early 2023, the market comes, or the NASDAQ comes off its lows. So this is also an area to watch right here. So you can see the green and the blue line is exactly where the RSI is trading, in my opinion, day to day, week to week. If this holds with uniform activity, then the next meaningful direction for markets is to move higher, of course, with the caveat and understanding that breaking below this area, staying below this area, means that we're actually gonna drift down. Now, in this video, the following charts are gonna be the most bearish charts in this analysis, and it is the S&P 500, and we're gonna take a look at this from a monthly chart. S&P 500 3-year monthly. This is absolutely bearish. Like I said, the most bearish charts are on the monthly. S&P 500 here is down as long as it is moving below RSI 50, which is exactly what it is doing. Then for the month, as long as it stays below 50, expect this to be a big down month net. If the S&P 500 is below 50 on the monthly, same thing with the Dow. Dow trading at 49.5-ish, and we can see that as long as the Dow monthly RSI is below 50, this opens the possibility for a big down move by the end of the month, closing at monthly lows. The only way to correct this is the Dow would have to recover by the end of the month and move its monthly RSI back above 50. Right now, the threat here is for substantially lower prices month to month, as long as the RSI for the Dow and the S&P 500 are below 50. The VIX is up about 36%, and coming off Friday's highs, pulling back for the week right there, and I might have a reason why that is the case. If you take a look at this topside line on the weekly, you can notice the VIX is coming to test that line, and by the time the week comes to a conclusion here in the next hour or so, that area could be an area of resistance week to week. If we turn negative in the coming week and we show resistance here, that would set the stage for a pullback in the VIX and a market recovery. This is a 2-year weekly. If we go, let's go 3 years on the VIX, it's gonna give us the top. In fact, let's go back a little bit more for the VIX. This is the VIX weekly. Let's go 3.5 years. And so this is 2020 highs. Take that RSI topside, draw a line on the weekly, and you can notice that the market is aware of this level. We've come back to test that topside line. If the VIX is to move higher, it does need to push through and clear this topside line. Otherwise, as already mentioned, resistance around here means we stall, and the next meaningful direction for the VIX is lower, which means the next meaningful direction for the general market is higher. The financial space, by way of the ETF, the XLF, down huge, down about 8%. Now, what next? Consider a couple things here. I'm going to draw the previous line here, or a backtest line, just like we saw with other markets. And there's another line which I'll draw the previous topside line previously. I'll draw it as such. And you can see this line was where we break out somewhere here. And we haven't been below the line since. What I'm saying is what I've already mentioned before. Is be on the lookout, possibly, potentially, if this area holds with the two lines coming and being tested, that the next meaningful direction is for the market to go higher. Taking a look at the Nifty, this is a 5-year weekly, couple of lines here. We haven't broken this line yet. We could eventually break it, and of course, if we break it, watch out for pickup in momentum to the downside if we are below the RSI lows line on the 5-year weekly. In fact, let me keep that line there because I want to draw another line. So line number 1. But what I want to emphasize here is this market can still take another round of selling. Why? Because we come back eventually, we would need to break this. This is the entry of 2020 lows. This is a line that has yet to be broken. And in fact, we can even go lower to test it and the market will be fine. Just as we did here. We tested it here and we held. And there was a double bottom process here. It took a couple weeks, couple months, and we held this area. So this market can still go lower, which is the Nifty. And eventually if it finds support here, even at lower prices, let's say here, we'll still recover. In other words, I don't see a major break as far as the Nifty is concerned. Taking a look at the daily, obviously there is a topside resistance line here. And so for those who trade day to day, this reversal this past week was a major tell. And we can say net trading below a 50-day moving average, now below a 200-day moving average. The market is trading with a little bit of a heavy slant or bias to the downside. But I don't feel that it's a market that is broken. Why I say that is, if we go back to the monthly, as I've been saying, for the month, albeit slightly, we are still positive. And so one can also say that we haven't really broken below this line here. And this line is the line or the area that we break out here, short term, coming off 2020 lows. And so as long as this blue line and as long as the Nifty is positive for the month with its RSI above 50, net, yes, net, month to month, we are still sideways to higher. Now, of course, this could change, but it's going to take price breaking lower and moving below this current support line on the monthly for the Nifty. So I would say, seems to me, yes, it's down over the last couple of months. It's not broken. Sideways seems to be the range to bullish in the coming weeks and months, as far as I can tell. GLD daily having a good day, and another couple of things here that were positive. We held the 200-day twice over the last couple of weeks, and now we are back above the 50-day. So that's an instrument that is showing stability. And we can also see there's a RSI lows line that came in play. We perfectly tagged this and we seem to be recovering. That's the bullish way of looking at it. Now that we've had that recovery, I suspect that now we come to a level of potential resistance, in my opinion. And the best way I can show this is if I take this line here, it connects to most of the lows from here, the lows right there, this couple lows. In other words, it connects to most of these lows, and it also was resistance here for this multi-day pullback. So I would say day to day, this is an area to watch for a pullback. In other words, yes, we recovered, but this could be a challenge in the short term, leading to a day-to-day pullback. And we can also draw a line connecting recent RSI highs. And again, we see there, essentially this line, the top side line, the black line, is an area to watch for potential resistance. If GLD is to move higher, it would need to clear this range, let's say this range here, a little bit higher. It would need to clear that range. The RSI would need to definitely clear the resistance lines that I'm seeing here. It would need to be above the red and the black line on the top side. Now let me share with you the SLX, which tracks the steel sector, and the monthly. Man, this is not a good looking monthly chart. We can see that over the last couple months, from 2021, 2022 improvement, 2023 improvement in prices month to month, but each time we have declining RSI strength. That is negative divergence for sure. So it's an area to watch for potential pullback. In other words, this market is showing signs of stalling. Now, it's not necessarily broken because we might be testing the recent breakout. Remember, the month, we haven't even reached the middle of the month, but this breakout could be what is being tested. But so far, not a good look as far as the steel sector is concerned. And on the daily, we can see that it is coming back to test right here, testing the 50-day moving average, which is slanting higher, which is good. And I would also suspect coming back to test this area here. This area could be support, as we've seen with other charts here. This is where we had moved above this range, and we had a good reaction in prices where we went higher. So coming off the lows here. And so until we break this line, I would say this is an area to anticipate that the steel sector finds some level of support. Again, remember, nothing goes up in a straight line. Even in the most powerful trend, there is gonna be pullbacks along the way, right? So we can also see that here, this could just be a pullback after a nice move since the lows of late September. On the daily, we got a nice lines connecting recent lows here in July, of the RSI lows here in September, and now being tested right here. If you're bullish, you want to see it bounce with uniform activity back above those two lines. Otherwise, if you're bearish, then what you want to see is a break below the two lines so we can continue with this recent pullback to the downside. Personally, I lean towards support based on the two lines, the black and the blue of the RSI. Taking a look at the XLE, again, this breakout failed a couple weeks ago, and that in itself was a warning. And so now we are coming to test the lows of that base, and this is also threatening to break. We haven't broken, but definitely tested this week. Is it gonna break? Well, we don't know, but this is the line and the level to watch. 81.84 is the level to watch right there. As long as the XLE can hold above 81.84, then it's okay. But if it breaks it, then that's the second red flag, and we are going much, much lower. Now keep in mind, we have to understand how the RSI positions us to understand how markets are going to respond. If the RSI 50 on the weekly can hold, in other words, if it can coil itself in the next couple of weeks back above 50, then ultimately this is just a retest of the weekly closing low here, and that ultimately we start building another base, or at least we go back into the base. So support back above 50 is what the bulls want to see, and bears would want to see a definite break of this area, a break and a staying below 81.84, and the RSI this time to stay below 50. Remember, we understand that as long as the RSI is above 50, for the most part, you're in an upward trending sideways market. So for there to be a down market, the RSI would have to persistently remain below 50 on the weekly for the XLE. So it has bent, but has not broken. On the daily for the XLE, just as we have seen with other many charts, there is this line to consider, potential support area. And we can also take, if we take the lows, coming off the lows right here, this is where there's a RSI movement. Take that and draw another line. I'll draw it in blue. So this blue line was used as support here, uniform action below the line, back above it, nice lows right there, kissed it here, lows right there, and now support here, and again coming back to test that line. If it breaks, then that's a change. If it bounces, well, this is where it's been bouncing since about July of 2022. I would say I would lean towards support and a bounce. Now taking a look at USO, which tracks crude oil, we can see here this market has been sideways. In fact, it's really hard to determine what it's doing here because it's telling us, hey, I am sideways, leave me alone. So we can say there's a little bit of a wedge there, and so hey, leave it alone. We'll see how it develops, but if there's going to be a trend to the upside, a breakout above the wedge is needed. And if there's going to be a trend to the downside, then we would see a break of this trend. RSI lows, the price lows wedge broken to the downside would take things down. Since we're in a sideways market, we're in a sideways market. You have to wait for things to resolve. Another way of looking at it is just the daily is also forming this long wedge. So a breakout, breakdown is going to be the next major trend once this is resolved, either movement to the upside or movement to the downside below the wedge. We shall see, but definitely sideways for now. Bitcoin weekly, how many times we talked about this area here over the last couple of weeks, and here we are. After tagging it twice, we hit a wall, and now we are pulling back. So that makes sense. So this double resistance here makes sense. More importantly, for this week, we are slashing aggressively below 50. That's why we are down 10-11% on BTC. If you take a look at the daily, again, as long as the daily now back below RSI 30.9, we have to give the benefit of the doubt to a sideways to down market as far as the cryptos are concerned. And the more it stays below RSI 30.9, the more we're going to be down, try and move higher, but make lower lows. More than likely that's the case because markets don't recover until you form positive divergence. So improvement of the RSI, this positive divergence, lower prices, improvement. Let me do that again. So the more you stay below RSI 30.9, the more it means you're going to have to make lower prices. At the very least, because that gives the chance for the RSI to show improvement. In other words, lower prices, improvement is when you make short-term lows. So for now, we can see this here, lower lows, improvement, and that's what brings us off the lows. So right now, the more you stay below RSI 30.9 on Bitcoin, the more the cryptos are going to be going lower. In fact, let's take a look at the 4-hourly, and you can see on the 4-hourly, BTC is below 30.9, which means that this is stuck in a bearish sideways environment. And just like at the highs, remember we talked about this, this is not your high in price, and this is not going to be your high in price more than likely. It's only when you make this divergence that you get some type of a pullback. So I would anticipate here, because we've spent some time below RSI 30.9, that we might have to make a lower low, and prices or the RSI would have to make an improvement. It's going to take some time, and any future positive divergence could lead to a stronger recovery. In other words, I think we're still seeing this downward momentum continue as long as the RSI is below 30.9. Taking a look at Ethereum shows us why we shouldn't be surprised that by sometime next week, maybe in the next week or so, this support line would come in play for the Ethereum weekly chart. Because if it holds here, bounces back above 50, expect a big week-to-week recovery. that would align nicely with this breakout here. Remember, we had a wedge breakout. We talked about this for many months. This wedge breakout gave us indication that the cryptos were moving higher or were going to start moving higher. Now we take that breakout and we can see that breakout level of the RSI here is what is being tested. So in the coming week, whenever Ethereum and Bitcoin turn positive for the week, be on the lookout actually for a snapback, powerful rebound rally. This is where the market is trading with about 45 minutes to go. And so it is. I am Eric with Mother.com, and I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator. Adonai.